unless I'm mistaken. You can elaborate on that, Scott.
No, that's exactly right. When I use the term loose stop, it's usually because it's a $200 or $300 stock. Even though a $5 risk on a $200 stock, that's normal trading range for those stocks. You can't just kind of hold it to that such a hard level. That's why I'm saying you kind of want use 5. You got to see how the stock behaves a little bit, before you can place a stop order. Obviously, I don't know, if Chart was on this conversation, I know he's got a completely different methodology, and this comes down to just knowing yourself and your strategy when it comes to trading, and which traders you're following on the site. Chart, I know, he goes in with large size and he puts tight stops in. Why does he do that? Because he's looking specifically at key inflection points where he knows he's either going to be 100% right or 100% wrong. And when he's told that he's wrong, he's going to take that loss. He's going to have the discipline to get out of it, and he's going to just get hit with that stop. And something in my gut, I could just probably tell that he's basically that trader who he's willing to be wrong, more often than he is right, and take those small little losses, because he knows when he is right, he's going to hit it big time, and he's going to get those, that 40% win rate that's really just going to just make the entire month, make the entire week for him. And that's the type of trader that he is. He likes putting in tight stops because he knows he's either going to be dead on or dead right for a big win or a small loss. For me, I'm more of a swing trader. I like to kind of hold positions. I like to see how the price action. I take everything into context. I take everything into the market, the sector, relative strength. And for me, it's just more about like, all right, I plan on sitting with this one for a few days because I think it's got a lot of good potential. I like the price action, the way it's playing out here. And I'm willing to just kind of go in and give it the wiggle room that it needs. Again, 2 totally different types of approaches to the market. You have to know which one works best for you and, approach it that way. But general rule of thumb, my first response to that feedback is if you're getting stopped out a lot, and I mean a lot, you need to cut your size in half and double up the size of your stops.
Well, and one last thing is, being around this business for quite a while and lots of different personalities, what I've found is that, like you said, Scott, you really need to adapt your trading to your personality. And I'll tell you, the market will expose your own weaknesses, your own insecurities. So, you should really find a style that matches your particular traits. If you're somebody who needs instant gratification, then getting involved in some type of scalp trading environment where you can get that. If you're more of a laid back, I'm going to take a swing approach and put on my position and not even care, well then kind of that longer term investment or longer term swing trading strategy, that's probably more so. That's why we have these different traders come on and describe their strategy. Robert is longer term, tech trader is longer term. Scalp trader, when he's doing his thing, he's like, I'm going to take 50 cents and move my stop to the balance and, get involved in those. Although he is even developing more of a swing trading style in his cryptocurrency position. So, you can adapt. It just takes some time to do so.
Hey, guys.
Yeah, hey Chart, what's up?
Hey, yeah, I was listening to the conversation. Very, very interesting conversation.
Was I wrong in my assessment?
Scott was pretty much dead on the money with his assessment. Now, I will say one slight modification. The setups that I use, I generally look for situations like I described earlier with Jim, where I feel an extraordinarily high probability of getting at least a little bit into the money. And then I have this decision matrix where I love a power position where I can kind of move to scratching that large size if it starts to respond in that initial burst in a way that I don't like. So I take a lot of scratches and a lot of very small losses. I don't take too many where it goes to my original stop because my whole system is predicated on finding setups that are probabilistically uncertain on the larger time frame move, but the possibility is there, but have a very high probability of getting at least a little bit in the money, and I don't like to scalp those. I like to leave that in place where I have a little bit of an edge on the pattern, and I get the size in, and I can make the decision to ditch it or not if it starts to work back against me. So I would say there's that issue, and the other issue that Gavin and I were talking about in our futures trading show the other day, which was falsifiability of the setup. So I look for setups specifically where, just like Scott was saying, I have a sense that the setup is built around the idea that I don't want to scale in it. I'm not looking for reversion to the mean setups. I'm not looking for a value-based orientation where if it keeps going the wrong direction, I don't have any incentive to stay with it or add to it, which is really, I think, most opposite to tech trader probably of anybody, because he really looks for situations where something is moving in a direction that he doesn't think makes sense and is at the outside of a pattern that it's going to be moving back to on a larger time frame. So he's really probably the most opposite in terms of like scaling into something like that. But Scott's somewhere on that spectrum as well, maybe a slightly shorter time frame. But I really look for setups where it's built around the concept of falsifiability. It's built around the idea that if it starts to move the other way, I'm wrong, and I've got no regrets getting out. So I think that's how I'd characterize it.
You know, and I would say that, you know, looking at the difference between you, Brett, and Tech Trader is, you know, you're a top-down guy and he's a bottoms-up guy, you know, so that's, you know, it's like polar opposites. You know, both use the fundamental approach, but, you know, you take that macro and bring it down, and he goes, you know, specific fundamental on, you know, specific stocks or sectors, and then works into the technicals. So, you know.
Certainly.
Yeah. All right. Well, hey, you know what? We've got a lot of good feedback on these discussions, and I think it really resonated with a lot of traders and investors out there. You know, anything you guys want to add?
Jim, the only thing I'd add, and this is to get off topic, I just wanted to note it since it was going on while we're having this discussion. We're starting to grind up towards the Thursday session highs and the E-minis, so just wanted to point that out to people.
Yeah, and I see that. I do have a S&P futures chart, and we are trading at those session highs, day session highs. Looks like we've exceeded the overnight as well. So, yep, and we are now above that opening range. So at least that's a bullish indication so far.
Yeah, I'd like to add one more thing about stop orders too, just real quick. So you have to, again, not only know yourself, but you have to know the stock that you're trading. So for example, Overstock is a it was a $42 stock right now, right? Well, so you can look at Verizon, and Verizon's a $48 stock. All right, now Verizon, its average daily range is less than $1. Overstock's average daily range is over $5. So you can't just you can't just say I'm going to invest $10,000 or $50,000 and calculate my position size by dividing the price to get the proper position size. To me, you cannot treat volatility the same exact way when you determine your position size. You have to treat Overstock completely different from position size in a Verizon based upon the extreme volatility that the two display. Similar price, absolute price, but completely two different volatilities. And I think you really have to take that into account when you are trading, when you're determining the position size and determining your stop order. We do actually have webinars on this on our Briefing TV YouTube page, and I will look it up and post the link to that. I believe Chart, myself, and Fundex both did webinars about 2 years ago or 3 years ago on how we both all approach position sizing from a day trading, scalping basis to a swing trading basis to more of a to more of a longer term position trading investment type of approach. And when I find the YouTube pages here, I'll try to get them out there on the site in about the next 30 minutes or so.
All right, gentlemen. Well, if that kind of wraps up this discussion, I can't thank you guys enough for adding your insight to this. I'm sure a lot of people, really got some benefit out of this, and integrating your different styles into the discussion. Appreciate that.
No problem, Jim.
All right.